Thank you.
Thank you, Fred. Good evening. For those of you that are at our meeting for the first time, I'm Sherry Scarborough, President of the Council. Thank you all for coming. Tonight we've got an interesting program, something that if you're on any social media or you're talking to your neighbors, you're hearing about the increase in insurance rates. But before we get to our program, let me introduce a couple people that are here with us tonight in no specific order. Mike Pratt, Palm Beach County Property Appraiser's Office. We have Karen Amber from the Supervisor of Elections Office in the back. Thank you for coming. They also have some useful information if you want to volunteer at the polls, and they have other information if you want to get that from them. We have Captain Moss. Captain Moss, do you have anything you want to update?
Sure. My name is Captain David Moss. I take care of the West Boca area out here with the Sheriff's Office. Really quick update so far for the year in terms of crime. The good news is our vehicle burglaries are way down as compared to last year at this time, so that's a very good positive. Hopefully that trend continues throughout the rest of the year. I'm gonna leave some flyers up here. We're doing a presentation in West Del Rey on May 3rd, and anyone can sign up, but you do have to RSVP. It's called Avoid, Deny, Defend, and it's a civilian response class for civilians to active shooter events, which unfortunately we see in the news way too often right now. So I'm gonna leave these up here for anyone that's interested. Please pick up a flyer and you can read about it and sign up if you want. Thank you.
We're also going to be emailing that information out. We have that, so we'll be sending that out to everybody. We also have Chief Bostic, Palm Beach County Fire Rescue.
Hey, good evening. I'm Joe Bostic. I work out of Station 57, and we do also cover the West Boca region. Actually, this last month has been a quiet month, but we do have like an update of a potential service that we're going to be offering now in County Fire Rescue. And we're looking forward to getting we already have 2 airboats that are located out in the Belglade, out in the Glades. And we're looking to get a airboat down here for like off of the Locks Road region, so we can actually offer those services down there and not rely on any other person or agency to come in. So that's something exciting that we're trying to get up to speed here. But other than that, if you guys have any questions for me, I'm located at Station 57, business hours, and feel free to stop by. Thank you guys.
Thank you. We also have Josie from Commissioner Woodward's office. Thank you for coming. Anything you want to update us on?
No, if the commissioner puts out a monthly newsletter, if you'd like to get it, we won't spam your email or anything, but it's just information about things that are happening in the county and in the district. So if you'd like that, just let me know and I'll put your email address on the list. Thank you.
Thank you. So we're all here tonight to talk about insurance. And I'm going to give you an experience that I've had, and this was just recently. We took over a community that had budgeted $204,000 for their insurance this year, which was a good budget number. It was 40% more than what they were paying last year. However, they got a notice from their insurance company in September that they would not be renewed because of the age of the roof of the buildings. So they immediately went to work. They knew they needed to get new roofs. They got bids on it. They needed to do a special assessment. So they had to call for a meeting, give proper notice for it, and they had to get 75% of the community to okay that special assessment and obtain the loan. So they managed to do all that. They got it done in December. They hired the contractor, and he started immediately on the roofs. Well, when it came time to renew the insurance, then the insurance company said, well, because the roofs aren't completed, it is $984,000 for their insurance. Needless to say, we panicked, they panicked, we did everything that we could, and finally at the very last hour, and I mean the last hour was the day before the policy expired, Citizens Insurance finally stepped in at 10 after 5 that day and said, we'll insure you, but it's $284,000. So they had no choice. They are going to have to do a special assessment. They went on a payment plan, but with the Citizens policy, Within 90 days, all the roofs of the buildings have to be completed. They have to change out all the electrical boxes. They all have to be inspected and signed off on. And then there's a list of minor things that have to be done, but they have to do it within 90 days. And being in the middle of a roof project, and if you have any dealings in Palm Beach County, unfortunately with the building department, it takes a while for the permits and to get inspected, and if there's a problem, re-inspected. So we've got our fingers crossed, and I'm going to let Brandon address some of this. He's been extremely helpful to me in some of my communities. Brandon Levy and Brian Rubin, they're both from Legacy Insurance. Brandon is the owner of Legacy Insurance and has had years of experience in homeowners markets, condo markets, as well as personal. So with that being said, please welcome Brandon Levy, and I will let him give you information. Thank you.
Did you want this? Sherry?
No,
No, that's for me? Okay. I'll do my presentation off those notes to see if that works.
those are just my notes.
No, I know,
won't
I'm just
forget.
kidding. Anyways, hi everybody. My name is Brandon Levy. Like Sherry said, I have been in the insurance industry now for 21 years. I am somewhat a native of West Boca. I moved here with my parents when I was 8 years old. I'm 44 now, so I've lived here in West Boca basically my whole life. Grew up in Sandalfoot, and I currently live in Mission Bay. Thanks for having us here. Today we're going to go over a whole bunch of different things. We're going to go over what's happening in the insurance market, why it's happening, what we as a community can do to try to reduce the rates, what the state is trying to do to reduce rates, and then a whole bunch of different things that you can be doing proactively to try to keep your premiums down, okay? One other thing, just so you understand our background a little bit, we insure a lot of communities in West Boca. So we insure Boca Landings, which is just across the street. We insure all of Mission Bay. We insure Sonata. We insure Saturnia Isles. We insure Boca West. We insure almost 500 associations in South Florida. Brian has been in the industry now, sorry Brian, for almost 2 years. He's a graduate of Florida State University, so am I. So anyways, I'm just gonna go over this stuff and then I'm gonna open it up to questions, okay? Is that how you guys wanna do it?
Perfect.
All right, cool. So a lot of the things that I'm gonna go over are like in a little bit of a bullet point thing in this flyer. You don't have to necessarily read it. I'm gonna verbalize it, but just so you have it when you leave, okay? So, with regard to insurance, and obviously everybody knows rates are going through the roof. There's basically 5 reasons why insurance rates are so high right now, okay? So I'm gonna go over each one of them. The first one is fraud. I know, exactly. What fraud? How could that be? So, what is fraud when it comes to insurance? Let me give you an example. Oh, actually, let me ask you a question. How many of you guys are condos and how many of you are HOAs? Condominium associations, raise your hand. 1, 2, 3. What's the name of your association?
Century Village.
Boca?
Okay, yeah.
Yours?
Same,
And yours? So you guys are all Century Village Boca.
right.
And the rest are HOAs? Okay, got it. Okay, so with respect to how fraud works in insurance, let me give you an example. Let's say a pipe busted inside we'll use Century Village for instance. Let's say a pipe busted inside the wall of your building. And let's just say it was a $10,000 loss, okay? In normal circumstances, pretty much anywhere other than South Florida, the adjuster would say, okay, the claim is $10,000. Here's a check for $10,000. You would receive the check, you'd fix your pipe, and you move on with your life. That is not what happens in South Florida. What happens in South Florida is the pipe busts, and not you specifically, but you go, well, listen, let me hire a public adjuster. And you hire a public adjuster. And then the public adjuster says, well, we better hire an attorney. And then the attorney says, well, let's sue the insurance company. And instead of saying that the damage is $10,000, we're going to find a way through the public adjuster and the attorney that it's $100,000. Okay? And now that $100,000 claim goes into the insurance company. Now, what ends up happening is that the insurance companies end up settling on these claims because they don't want to go ahead and have to pay defense cost for the insurance company, because it's a lot cheaper to settle than it is to fight an attorney. So let's say that $10,000 claim now turns into a settlement of $50,000, right? Now, when you multiply that by thousands and thousands and thousands of claims throughout all of South Florida, what ends up happening is that insurance companies end up losing a lot of money. And as a result of them losing a lot of money, insurance companies go out of business. And when insurance companies go out of business, it creates a gigantic problem in the insurance market, because it causes insurance companies to have to spend more money on their own insurance, which is the second issue in Florida for insurance. It's called reinsurance.
Before you get into that, Brandon, let me jump in with a quick point, a quick statistic to help illustrate that for everybody.
Please.
This past year, over 100,000 insurance-related lawsuits occurred right here in Florida. The rest of the country combined was less than 25,000. So we had quadruple the number of insurance-related lawsuits just in our one state than the rest of the 49 combined.
Okay, I had a claim, and what the insurance company offered to give me was an absolute joke. It did
Right.
not come anywhere close to fixing that. So I had no choice but to hire a public adjuster.
And I understand that, and actually, personally, for me, I had an issue with an insurance company not wanting to pay me in a timely manner, and I had to hire a public adjuster, and and I had to go through that whole process. There are lots of times where public adjusters are needed and attorneys are needed, but
No attorney involved.
Okay, but I'm saying maybe not in your specific situation, but in general, the majority of losses and claims are fraudulent. So,
I wasn't.
no, okay, of course, yours is, and unfortunately now you're gonna pay the price, and all the honest people pay the price for the dishonest people. So now what ends up happening is, with all these claims, insurance companies have to buy their own insurance. I don't know if you guys realize that. Like I said, it's called reinsurance. It's bought twice a year. It's bought on January 1st, and it's bought on June 1st. And reinsurance is something that's bought on a global level, okay? So when there's a lot of losses, not only locally, but throughout the world, like hurricanes and fires and tornadoes and earthquakes and flood and COVID and war, all this other crap that happens, the cost for insurance companies to buy their own insurance has skyrocketed. The average increase of reinsurance for insurance companies is 150% increase. Think about that. Insurance company has to pay 150% more to get their own insurance. So only two things happen in that situation. Either that cost trickles down to us and we pay the increase, or the third issue happens, which is called capacity. Capacity is the amount of an insurance company purchases to sell out into the market. Okay? So let me give you an example. Let's say an insurance company last year, prior to this rate increase, bought $500 million to sell. Okay? Let's say Century Village is worth $5 million, just using Century Village because you brought it up. So yours is $5 million, and they go out into the market and they say, last year I bought $500 million of insurance to sell out into the market. But now, the cost for me, insurance company, has gone up 150%. So I cannot afford $500 million of capacity anymore. So now I only buy $300 million. Okay? So now I've bought less capacity at a higher price, but the demand for insurance which is what you need, 5 million for your association, 5 million for your, has gone up because the cost of insurance is based off of the construction cost, what it costs to replace your building. So as inflation goes up, the cost to replace your building goes up, so the amount of insurance you need goes up. So when capacity goes down, right, but demand goes up, what ends up happening? Supply and demand, right? So what happens? The price goes through the roof. So that's the third issue. And because of that, there are so many insurance companies that have gone out of business because they cannot afford to buy enough capacity to be in the market. Okay, does everyone understand those 3 points? Is this too much detail?
No.
It's good? Okay, I'll go a little quicker. I don't want to get, go ahead.
What happens when a company makes an exchange? What does that mean?
I'm not sure what you mean.
Tower Hill did an exchange, is an exchange company now. You understand what they have done?
Tower Hill Prime or Tower Hill, there's
No,
two.
it's not, Tower Hill Signature, Tower Hill Prime, no more.
Correct.
Everybody's going into an exchange from Tower Hill.
I'm not sure.
Oh, I think what he's referring to is Tower Hill is trying to roll a lot of their business into admitted paper, like with an admitted company, meaning that it's regulated by the state of Florida.
Is that what you're trying to get at?
No, it's an exchange.
I'm not sure what that is.
That's what I couldn't figure it out myself.
I mean, Citizens has something called a,
The citizens of, but
not
not
that.
interested citizens.
I don't know what, I have no idea what that is.
You have no idea, it's not a mutual company then?
No, it is not.
Oh, okay.
I
I don't
don't know.
understand what this exchange is in Tower Hill.
Who gave you information about the word exchange in Tower Hill?
I have a policy from them.
Is it a personal policy?
No, it's an HO6 policy.
It's an HO6 policy, yeah. I can't answer that question because I don't know what you're referring to be totally honest with you.
Like, I had to pay $80 more to be part of that exchange. It's like they're putting away money in a separate, instead of buying reinsurance, this is what they're doing.
Yeah.
This is what it appears to
If
me.
it were me hearing that,
Yeah.
I wouldn't feel comfortable being with Tower Hill.
Okay, that's
Tower
right.
Hill, the insurance company,
Yeah.
was down, Tower Hill Prime was downgraded.
Well, it's not Prime anymore.
I'm just saying,
Yeah.
so the company has been downgraded, so I don't feel overly secure with them, we do write policies with them, but anytime you're with an exchange or with the state, like Citizens,
Yeah.
you have to be very weary of what you're getting for such a low cost normally, which we'll
is
get
really
into.
not a low cost, but that's another story.
Okay,
I mean,
so-
I thought it was a bookkeeping gimmick.
I'm not familiar with what he's referencing, are you, in terms of the exchange?
I've heard something along the lines of how they're trying to free up a little bit more of their capacity on the non-admitted side, so they're transitioning a lot of the eligible policyholders to admitted paper, meaning the key distinction there is admitted is regulated by the state of Florida, non-admitted isn't. And so they're trying to free up a lot of the non-admitted capacity by rolling them over to the admitted, but I haven't done too much research into that.
You guys,
I'm gonna do some research on it, because I've never heard of that.
Okay.
I've never heard it with that terminology either.
it's an exchange.
Excuse me, sir, can you please sit down or move? I can't see the people. Thank you.
Thank you.
Brandon, can we wait to answer questions after?
Absolutely,
Sure,
yeah, we
okay.
can move on, yeah.
I just brought that up.
No
Thank
problem.
you.
So anyway, so that was the third reason for insurance cost increase. The fourth and fifth reason are pretty simple also. The fourth reason is that building in Miami that went down, and it doesn't really affect HOAs as much as condos, but when the building in Miami went down, is everyone familiar with that building that collapsed? That caused a huge issue with underwriting. Because now, when insurance companies have very limited capacity because it costs them so much money because of all the fraud, now they don't want to give the insurance to any building. They want to give insurance to the best buildings. Buildings that have brand new roofs, that have updated electric, that have updated plumbing. You understand? They want buildings that are west of 95, that are newer construction, because those buildings are less likely to have claims, as opposed to Century Village, which the buildings are 50 years old, half of them are not updated, and we write about 50 associations in Deerfield, and we used to write all of West Palm Beach, so I know Century Village very well. So I'm not attacking your building, but I'm just saying those are old buildings. So they're less likely to want to give this very limited capacity out. So it shrinks the market even more, right? Less and less insurance companies. And then ultimately the fifth reason is all of the hurricanes that just hit. If you recall what was it, October, or no, September or October, 2 hurricanes hit all at the same time, one on the West Coast and one on the East Coast. And then, at the end of the day, the people in Tallahassee have done literally nothing since last month when they changed the law to make any significant changes to make insurance companies want to write in Florida. So when you take insurance fraud, reinsurance costs, capacity issues, buildings going down, hurricanes, and no leadership in Tallahassee, you get the total worst nightmare in terms of why insurance rates are going out of control. Okay? Does everyone understand that? Now there is positives that are coming about that I want to make sure that you understand. But is there any questions about that part of it? Yes, sir.
One of the things as an appraiser, I have never quite understood, and that is when the premiums are developed by insurance companies, they don't use Marshall and Swift. They have their own cost replacement books that seem added with the idea that not only construction materials, but they had into this, going to Atlanta because you can't get materials. And all these other costs that really are, well, I would say, just padding up the premium amount, because they're saying, and they look at it like the hurricane or whatever the disaster was, flattened a concrete block building completely.
So
the worst case scenario is how they do their business, and I think it's...
So in the condo and HOA world, which is what we're talking about, in the condo world, there's a statute, 718, that requires all condominium associations to get a new appraisal every 36 months. It's required, state statute, so you know how much to insure your buildings for. On the HOA side, if you have a clubhouse or a lot of property, it's also strongly recommended that you get that appraisal done every 36 months so that you make sure that you're insuring to the proper value. But with respect to determining that replacement cost, an appraiser is hired. And it's a construction appraisal, like well, not a reserve study. It's it's a construction appraisal, a per dollar square foot appraisal. And the appraisers do use Marshall and Swift. They do use that software. So an appraiser goes out, measures the buildings, figures out what the square footage is, figures out the construction of the building, and they plug it into some software. It spits out a number, $120 a square foot. Then you send it into the insurance company. The insurance company has their own internal software that determines what they determine is their minimum per dollar square foot that they're willing to insure in a specific location. And as long as those are somewhat in line, they will accept your appraisal. But there are many appraisers out there and many associations that try to manipulate that system, and they say, hey, listen, appraiser, we'll pay you more money, but make this $80 a square foot. You can't do 80 anymore, but $100 a square foot.
State certified appraisers are under uniform standard professional appraisal practice.
You would hope that they're all sticking to that standard, but they don't. But the good ones do. And this has nothing to do with what you do as an appraiser. That's a different type of thing, right? Because you're part of the
mass appraiser, but I'm state certified as well.
As a replacement cost appraiser.
As a state certified residential.
Right. So that appraised value is different than what we use. So for correct me if I'm wrong, but the appraised values that you do are determining what it costs to buy and sell the buildings, right?
Well, we use market value to set the tax roll, but we look at all three approaches: the income, the cost, and of course the market value.
So what insurance companies look at is simply type of construction, concrete. The cost of concrete today, $200 a square foot. Square footage of the building, 20,000. 200 times 20,000, boom, $4 million. That's how much the building's worth. And that's how it works. So as construction costs go up, what happens?
Insurance goes up.
Because you have to insure to a higher value per dollar square foot. Do you understand that? That's super important because the appraisal is the number one determining factor of your premium. Okay?
It's the number one determining factor, but at the end of the day,
approach to it, the cost appraisal.
Yes.
Replacement cost appraisal.
The replacement
Yes.
cost.
And what I was getting at is at the end of the day, the insurance company has the final say. So if your building's valued at $125 per square foot on your policy and the insurance company thinks it should be at $150 per square foot, they're either gonna do one of two things. They're gonna require that you insure it to $150 per square foot and pay the premium for that, or even worse, they'll put what's known as a co-insurance requirement on the policy, which might not seem like anything at the time of binding the policy because you're getting it for a little bit lower premium than you otherwise would have. But in the event of a claim, hypothetically, if you're insured to $125,000, but you should be at $150,000, that's a 20% deficit. You're going to get paid 20% less in the event of a claim than you otherwise should.
That's how they screw you, right? That's the co-insurance play. So that's why the state forces board members, for condos that is, and basically for HOAs too, to get a new appraisal. Because before 2009, I think, that wasn't the law. So anybody on the board can make up anything that they wanted to as the replacement cost. And when there was a claim and a hurricane, the insurance companies would penalize you, you wouldn't have enough money. So now you're forced to use an appraisal to determine the valuation. Does everyone understand that? Okay. I think this is enough detail about all of this, right? So maybe we should go into something different because we're really getting into the weeds on this and I don't want to get everyone bored. Go ahead.
I have a problem with the use of the word fraud, insurance fraud.
Okay.
If the insurance company says that the damage to your building or apartment is, I think you use $10,000 as your example.
Yes.
And I'm the homeowner, and I look at it, and I think it's more than 10,000, it's 15,000, 20,000. So you're not going to come to my number, and I'm certainly not going to go down to your number. So I hire an adjuster or a lawyer. Where's the fraud?
Well,
We have a disagreement on the value of the loss.
I understand, but I get it. Listen, I understand what you're saying, and in that maybe that small little situation that makes sense. But let me give you a few examples of how attorneys and public adjusters take advantage of the situation. So let's say there's a hurricane, okay, and let's use Hurricane Irma 2017, where this whole thing started. And you have a home, and there's a hurricane that comes through the area, and 4 tiles blow off. Okay, let's just say four or five tiles blow off. And you're like, well, I want to get a new roof. So you hire a public adjuster, and a public adjuster says, let me get on the roof, I'll get my roofer out here. And the roofer says, oh man, you have 20 roof tiles broken over here, and you have a leak over here, and a leak over here. We need a brand new roof. And in reality, it's not true. In reality, a few tiles fell off, but the public adjuster who gets paid based off of the valuation of the size of the loss, they say, listen, we need a brand new roof. Here's an $80,000 or $100,000 loss insurance company. Well, hear me out. And then the insurance company says, well, they send out their own people. And the insurance company says, well, there's no way, this was $10,000. We have our own people and says it's $10,000. Okay? Now, then the public adjuster says, well, let's just hire an attorney. And the attorney says, okay, no problem, we're suing you. Right? Now, what happens in that type of situation is that the insurance company, prior to last month, was required to pay for all of the attorney's fees for the insurance company to defend themselves and for the claimant who's suing them. For any time that there is a settlement or a paid out loss, the insurance company pays both attorney's fees. So what was happening was that attorneys were putting in claims that were fraudulent, that weren't real, at inflated prices, knowing that the insurance company would always settle. So when you do that thousands and thousands and thousands of times, maybe not every one of them is fraudulent, but at a certain point, you can see that the insurance company is being sued and they're not real. And therefore, insurance companies say, what the hell are we insuring in South Florida for? We lose money we make money everywhere else but in Florida. We're out of here. So they all leave or they go out of business. And then you come to the situation where we're in now. Now there's no insurance companies. And the ones that are left, what do they do now? We'll stick around. We're going to increase your premium 100%. We'll increase your deductible. You must buy the insurance. You have no choice. It's not like you could say, Brandon, I'm not buying it. You must buy it. And now they're screwing us. So the state law just changed. And now they said, hey, listen, moving forward, If you sue an insurance company, the insurance company pays for their own attorney, you, the claimant, you pay for your own attorney. You know what's gonna end up happening? Attorneys get paid when you get paid. Everyone knows that saying, we'll get paid when you get paid. So what's gonna, in theory, what's supposed to happen is now there's going to be less fraudulent claims because no attorney is gonna wanna work when they don't really think they have a shot to win. So over time, you're hoping that less fraud happens, and as a result of less fraud, meaning less claims, when there's less claims, more insurance companies come back to the market, and because there's more insurance companies back, more competition is created, which causes premiums to go down. That's the theory of this new law that just went into effect.
My question has
It'll
to
take
do
a
with
few
fraud.
years.
It's gonna probably won't even really make any significant effect until at least January of this coming year. What was that?
My question had to do with fraud.
Yes.
You're using the term fraud, when in fact, I don't see the fraud.
Well, maybe you're only maybe seeing one or two claims when you see so many claims throughout the year. Or if you just read the articles about the attorneys that have been disbarred, there was 3 attorneys that were disbarred from the state of Florida for what they were doing. Just sending in hundreds of claims every month.
Out of thousands of attorneys, okay, you probably can find that in any profession.
Are you suggesting that there's no fraud in the market?
I'm not suggesting that at all, but I think your use of the term fraud is improper when the claims are looked at by the insurance companies, they're looked at by private adjusters, and they're real claims.
Some are.
It's just a disagreement in value.
Not always.
Not always, of course not always.
Right. Listen, I'm not on the insurance company side. I hate insurance companies. They're screwing me just as much as they're screwing you. But we have to be real. The part of the issue is fraud. I mean, there's no doubt about it. There's no ifs, ands, or buts about it.
I think I have trouble with your use of the term fraud for people filing claims.
Okay, you make a point.
You want me to? I can say misrepresentation.
Don't listen to that word.
Misrepresentation.
Hear everything else, but don't listen to that word, okay?
It's mostly just a blanket word to describe the excessive litigation that is being exploited within our market. So it's not necessarily by definition fraud, but it's encompassed within that umbrella, so to speak.
You said the attorneys are going to be less willing to take on these cases based on this new law.
That's the intent, for sure.
But I don't understand why. If they're getting a settlement, and you're saying that the insurance companies are willing to settle, and that's the whole theory behind this issue.
Prior
they're still
to the
gonna
change
get-
of the law.
But they still get paid if the insurance company settles.
Yeah, of course, but think about it. If you are taking on a claim that you don't feel 100% confident in, and you work the claim, and now the insurance company knows that you, the insured, have to pay out of your own pocket for the attorney now, don't you think the insurance companies are gonna take advantage of that to a certain point? That they're gonna prolong the claim. They're gonna deny claims that probably are not supposed to be denied. So it's gonna prolong it. So attorneys are going to be less likely to take on more misrepresentation of claims, or however you wanna say
It's
it.
not taking forever to get paid, is what you're saying.
And they don't wanna do that.
Right.
So again, do I think that me personally, doing this for 21 years and doing this all the time, do I think that this is the perfect solution? Absolutely not. I think at the end of the day, this will hurt us long term because insurance companies will have all the advantage now. But in the short term, where we're in a market where there's no insurance companies, there is no other solution. You have to entice more insurance companies to come into the market, or the premiums will continue to rise by 100, 200%.
Are we the only state that allows public adjusters to do the kind of thing they do? Where are these insurance companies going when they leave the state?
Pretty much everywhere other than Florida. I mean, the rules in the state of Florida are so bad that it causes this type of issue. And it's not something that just started yesterday. This all is a culmination of a multitude of issues. The ones that I just explained to you are the 5 main ones. But it all starts, again, from fraud. There's no other clearer way for me to say it, because I'm not going to back up from that, because it is what started it. And the trickle-down effect of the fraud, and then how it causes insurance rates to go up, and how and how all these things change. That's the problem.
Are public adjusters being utilized in other states?
I'm for public adjusters, don't get me wrong. I think public adjusters have a position, and an important position, especially during a catastrophe like a hurricane, because insurance companies like to take advantage of the client.
Right.
So there are specific instances where a claim is so big that you need to have a public adjuster on your side, and you need an attorney on your side. Absolutely. Personally, I used it for my house in Mission Bay. The insurance company that I had, they would not even respond for 6 months. Wouldn't respond. And I'm in insurance. And I got really pissed, and I hired a public adjuster. They went out there to hire an attorney. 2 days later, I got a settlement. Like that. Boom. So there is definitely a need for it. But when it is abused,
And why is it abused in Florida more than
You know,
elsewhere?
can-
That's
can
my
I jump
point.
in?
absolutely.
Most of you know I manage communities. The past 2 years, in my communities, we have received more architectural requests for roof replacements. Now, none of my communities are new, they're at least 20 to 30 years old, and we kept getting these applications, and there was an insurance adjuster that would knock on doors, and he got these people's roof completely replaced. The homeowner paid no fee, they didn't pay deductible, he got it, the settlement over and above with the roof cost, so they basically, they got a free roof. The roof was aged, there was no, 50% off because it's met its useful life. They got the entire cost of the roof paid for by the insurance company, and I'm telling you, I saw this day in, day out.
And you're making a really excellent point that I didn't think about.
Which to me, that is fraud, because a lot of these roofs are old, 25, 30 years old.
And because of that actually happened to me in Boynton too, a lot of my properties in Boynton that happened. And because of that practice, what ends up happening is that the insurance companies, they change their policy. So now, if you read, this is for condos more, if you have a roof that's more than 15 years old, they will not give you replacement costs on the roof. They'll give you the depreciated cost of your roof. So if your roof costs 100 grand and it's half of its expectancy and there's a loss, they'll only pay you 50,000, but you paid premium on 100,000, right? And it's because of those, that's part of the reasoning for it.
I'm gonna be tenacious on this point.
Go for
Why
it.
is this unique to Florida?
I don't know why it's unique to Florida, other than because I don't insure anywhere else other than Florida, so this is what I know. But I just think that if you think about the type of contractors that work down here in South Florida, they know how to manipulate the system. The laws that are in place, to my knowledge, I don't know all the laws, they benefit attorneys more than anybody else.
Brandon,
And-
you just gave the answer to the question. Okay, when you said, I don't know, you do know. It's the legislature and the laws that they pass.
Right.
Or the laws that they don't pass.
Right.
Okay, that allows this to happen.
Right.
Okay, and it's been happening year after year after year. All right, someone's up there, okay, get some kind of benefit of leaving the status quo the same.
Yeah, lobbying in Florida is
There you
huge,
go.
you
And
know?
that's the answer, because contractors do what contractors do, they do it worldwide.
I'm gonna put a finer point on this. You named 5 reasons, right, at the beginning?
5 main reasons.
5 main
Or
reasons.
6 reasons.
I think number 2 is what he just said.
Reinsurance?
No, I think number 2 is Tallahassee.
Oh,
And
in order of...
Yeah, and Washington DC.
Oh, I mean, the only reason why I didn't make them number 1 is because they just finally made a change in Tallahassee that I think is going to happen. But ultimately, all the rules for insurance companies and us as residents are all determined by Tallahassee. And if you don't have the right leadership, no matter if you're Democrat or Republican, you're in trouble. I mean, that's a given. But in the market, no matter what they do in Tallahassee, we still have to figure out how to live in that environment. And I'd like to kind of move it along to something more positive. I know this is super negative, but there are things that you can do as a community, depending upon what agency that you're with, that does help you negotiate better rates for your community. Do you want me to go into that, or not really? Why don't you go into first, because I'm talking a lot. Why don't you talk about the HERT program a little bit, and just tell them, what it is and what we're doing.
All right, so I'll hand out some flyers about this after I go over what it essentially is, but we're at the point right now, Brandon just described everything going on in the market, why it's so competitive and difficult to find placements for your properties, and that's why our job is really ultimately shifted from trying to sell the insurance to policyholders like yourselves, from trying to sell your properties, your risks to the insurance companies. And the way in which we do that is we have to differentiate your risk, your property, from any other neighboring risks or properties around you, and ultimately paint a picture to them about why you are a safer risk to insure than any other property around. And one of the ways in which we're able to do this is by providing what we have, our proprietary HERT program to you, which HERT stands for the Hurricane Emergency Response Team, which describes ultimately what the program is pretty well. It's a pre-arranged agreement that we will facilitate between your organization and our catastrophic loss third party, in which case if another Hurricane Ian or comparable storm were to shake our end of the coast this time and cause catastrophic damages across numerous properties all up and down the coast, we already have a team put in place to be at the community within 3 hours and start mitigating further damages, whether it's putting up a tarp on the roof, temporary roofing, generators, laborers, they have it all to get the property back to habitable conditions as soon as possible. And that's ultimately one of the methods that we have to sell your risk to the insurance companies, as opposed to many properties that don't have a program like this in place. That catered more towards condos rather than homeowners associations. Figure I'd make that distinction, but I can hand out some of these flyers on that now if anyone would like some.
Ultimately, yeah, go ahead.
I don't know, Citizens is so huge. How many real other insurance companies are operating in the state of Florida other than Citizens? Because
Well, it's a good question. I mean,
You know,
I do know. I mean, it just depends on if it's an HOA or a condo, and that does matter. So,
what about single family? Any
well,
idea?
single family homes, I don't really do too much. My company does. But with regard to single family homes first, since that's what you're asking, I would say 90% of the communities right now are with Citizens, right? Are with Citizens. The governor, just a week and a half ago or 2 weeks ago, put out into the world that Citizens is not financially secure to basically insure all of the risk that it's taking on. It's basically insolvent. Although you can't, that was the wrong wording, because Citizens can't be insolvent because it's backed by the Citizens. So all Citizens policyholders, if you're with Citizens, if there is a loss where Citizens runs out of money, Citizens will send you a bill up to 45% of your premium to pay for other Citizens' losses. So it's not good to be with Citizens with respect to coverage. It is good to go with Citizens with respect to premium, because they're almost always cheaper if you're with them. But what you get for that cheaper price is not what you need in the event of a loss. Because if there is a loss to your house and Citizens runs out of money, how long do you think it's going to take for you to get paid? Like a ridiculous amount of time. And if they run out of money, you got to wait for the Citizens to pay Citizens, the Citizens, to pay Citizens, to pay you. I mean, it's not a good solution.
There's no alternative to Citizens.
There is no alternative.
90% of them.
Unfortunately, there is no alternative to that on the single family home
By
side.
mortgage companies.
Correct. On the single family home side.
Yes.
But who's with an HOA again? Oh, what's the name of your HOA? Brentwood, yours?
Waterbury.
Waterbury?
Boca Chase.
Boca Chase?
Boca Chase, Boca Woods.
Boca Woods. Boca Woods, Boca Chase.
Boca Winds.
Oh, Boca Woods. Okay, got it. So I'm trying to get an idea. So with respect to those, the communities, it's more driven on liability. liability is bodily injury or property damage that's caused by the association. When you're in a big community, let's use Boca Winds, the master association, you have to insure for someone drowning in the pool, someone getting shot, someone getting ran over. It's dependent upon how many units are in the community, okay? That's a totally different amount of insurance companies that are in the market. For that, there's probably 5 to 6 competitive markets. Philadelphia, Trisura, it used to be Tower Hill, it's Indian Harbor. There's a few little ones on that. For the property side, with regard to HOAs, there's probably like 2 or 3 also, because on HOAs, you're insuring the clubhouse, or you're insuring the outdoor property or the pool. You're not insuring the buildings normally, right? In all of your communities, you're not insuring the buildings, right? You're insuring the common area stuff. So for that, it's a little bit easier because you're not insuring residential properties. So what do you think? There's, I would say, the same 4 or 5 carriers for that?
Roughly.
Yeah, so, but the rate increases on those are driven by liability, not property. So the average rate increase on an HOA, I would say, is approximately, I don't know, 50% right now, 40 to 50%. And then you have to insure for directors and officers and crime and umbrella and all that other stuff. Underneath a condominium association, it's different. You're insuring the buildings. So there's citizens, which is not the best option at all, but it's the cheapest. American Coastal, which I know who you're with. Right, yeah, trust me, I know, because we know Century Village. Heritage, which in your specific community they won't write, but Heritage is out there. There's a company called Trisura, and there's a few other smaller companies that are not financially secure, in my opinion. I'm not going to say them right now because it's being recorded, but there's a few.
I think a company called Travelers is in there.
Well, Travelers is not for property. Travelers is for boiler machinery or crime or directors and officers.
Yeah, that's what it was.
Yeah. So there's a whole bunch of different things. At the end of the day, though, a lot of association board members say, "Well, listen, we just want to go out and we want to get 3 bids to get our quotes." Right? That's what we always hear. Sherry always says that. She's like, my communities want us to get 3 bids. And she knows this, but I'm just going to say it. There's no such thing as getting 3 bids. There is no such thing in condominiums and HOAs. Because there's such limited insurance companies, I just explained to you why and who they are. The job of the board is to determine who is the best person and team to work with, based off of their expertise, based off of the services that they're going to bring, and based off of their relationship. Because if I go, let's just use Century Village again. Let's say I say, listen, what's your name again?
Joel.
Joel. Yours is a master program, right? So you really have no control over your community, right? But let's just say it was an individual building, and you're with American Coastal, and you don't like the increase, 50% increase, and you say, Brian, go get me a bid. He can't go to American Coastal. He can't go anywhere because the other agent has gone out to the market. So the insurance companies force you
That's what happened.
to choose the agent and the agency that you want to work with before getting the price.
Yeah, that's the argument.
Okay? And that's really annoying for people who don't do this every day, because for everything else in the condo and HOA world, you can get 3 bids. You can get 3 bids for a landscaper, a contractor, a plumber, an accountant, a management company, anything
But no, not.
except what we do.
Yeah, it's true.
Isn't that weird?
Yeah, it's very true.
Do you know why? Because the price is not set by us. It's set by the underwriting information that you give the insurance company. So if I give let's say he's the insurance company. If I give him all the same identical information that you give him, the price spits out the same.
Yeah.
But how you determine who you want to work with is their plan on how to present your information to them. Because if you present the same information in a different way, you get a different result. Because you're negotiating with a person behind a desk. So you need to make sure that the agent and the agency that you're working with understands the risk, knows the game plan. Like this HURT program thing that we just talked about, no one has that. You know how unbelievably important that is for you for rates? If you're an underwriter now, and you make a determination of what you're charging somebody, if you know that the condo or HOA has a predetermined response team to control cost in the event of a loss, right? So there's a hurricane blows apart your clubhouse. Do any of you have a plan? You're gonna start calling and say, hey, listen, I need a contractor, fix my roof. When you already have it set in place with your contractor set up and your pricing set up, and we can go to the underwriter and say, hey, listen, they already have a plan in the event of a disaster. You're not gonna have a claim 3 or 4 times because of price gouging. We have our plan in place. Who's more likely to get a better price? So, an association that has a plan in place, or association that doesn't know what they're doing? What do you think?
Plan in place.
Right. How many agents and agencies have ever talked to you guys about that type of thing? I know the answer. It's none, because no one else does it.
Yeah, it's not.
That's why I know this works for us, because this is something that no one else does. So that's the way you have to think.
Does a premium to have hurt
Is free
is free?
with us, yes.
I don't understand.
Go ahead. She had her hand raised like for a long time. Go ahead.
Are you going to address people who have to replace their own house regarding insurance?
We can. For your own personal insurance?
Because we're part of Brentwood, but, you know.
You do your own individual policy. We can do that.
The people who live in Brentwood have to get their own insurance.
Yes, we can
So
most definitely do
Can you
that.
talk about the benefits or whatever?
Absolutely. But before I will come back to that, did you have a specific question about the
I don't
association perspective?
understand how the plan could be in place when you don't know any pricing before the event occurs. I mean, the pricing before the event occurs can be very different from the pricing after the event.
Well, there's a range of price. It's not like 100% that's what it is. There's a range of price. And even if that range changes at the time of the loss, the underwriter, the person who gives you your premium, doesn't care, doesn't know. All they know is what we tell them. These people, this association has a plan in place. Here it is. They come out, this company comes out and does a whole bunch of things, and we send it in. So it's perspective from an underwriter's perspective. But you have to be eligible. Your community has to hit a certain amount of premium to be eligible for that program. It's not everybody. Then that would be insane, right? You understand? I mean, if you are just a home and you create $2,000 of premium, that creates $200 of commission to an agency. You can't be eligible for the HERP program. It would cost way too much money, and there would be not enough people to do hundreds and hundreds of homes. So the HERP program is more geared towards larger homeowners associations or condominium associations. It's not for single family home things. Okay? Any other questions about condos and HOAs? And I'll answer that question. Yes, sir.
Getting back to single-family homes, at
Okay.
what point is one better off to self-insure than to pay these exorbitant, never-ending increases in rates? I'm talking about a non-mortgaged property.
Not mortgage property.
You're taking business away from the.
No. I mean, I'm a licensed insurance agent. If I tell you right now that you should self-insure, that would be a mistake on my part. So I would say never.
Why?
Why? Because how much, for me, I don't even sell homeowners policies individual, but the company does that. So it has nothing to do with me or money or anything like that. How much is your house worth?
Probably about 500,000.
Okay, how much is your premium? 5,000, 4,000?
More.
Let's just say it's 5,000 for easy numbers.
6,000.
But just for easy numbers, let's say it's 5,000. $5,000 for 10 years would be $50,000. So that would be, how many, what would that be? That'd be 100 years of premium to get to $500,000. If you had one loss that messed up your house, I mean, you made the right decision. Now, a lot of people say, well, I'll keep that $5,000 and I'll put it in a bank and I'll earn interest and blah, 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 all that other crap. Who does that? No one does that. So the answer to your question is, I don't think it's a good idea. Now, if you have $20 million and you can fork out $500,000 at any time and you're not worried about it, yeah, okay, that's your choice. But in general, do I think it's smart for your primary residence to not have insurance? I would say no, I don't think that's smart. And it has nothing to do with premium or money. But that's just a risk reward. That's an opinion.
When you talk about being thrown into citizens against your will and being charged an exorbitant premium and being on the hook for 45% surcharge if there are too many claims and having to wait 2 years to have your claim honored, I'm sorry, I don't agree with you. I do not
That's a
agree
good
with
point.
you.
I'm not saying it's right or wrong, and that's a very good point. If you are willing to take the risk and don't think that something's going to happen to your house, and you don't want to take on the risk of being with citizens and a 45% on top of that, then don't do it. Then you shouldn't do it. Most people buy insurance because they're forced to by a bank. That's the real truth of the matter.
I'm not saying.
No, I know somebody who was forced, a broker, UPC went out of business, right?
Yeah, that's my house was with UPC.
Okay. Now what happened, they were forced to go with Citizens, but I gave them a different broker, and the other broker was able to give them Southern Fidelity or some other company.
Yeah.
That broker was too lazy. A lot of these brokers are very lazy. They don't want to.
I agree.
Yeah, this is a
no
big
doubt.
problem.
Listen, do you think all doctors are the same?
No.
Do you think all attorneys are the same?
No.
Do you think all property managers are the same?
No.
Do you think all insurance agents are the same?
No.
Because there's all different levels of professionalism in every industry.
Yeah.
That's the point I was trying to make. You have to figure out who you want to work with in your community, because we're not all the same. If we were all the same, then we wouldn't be good, So and you have to differentiate yourself, and that's the whole key. You got to figure out who knows their stuff, who's willing to fight when there's a loss, who you want to work. I mean, sometimes people think I'm way too direct, and they don't want to work with me. And a lot of people like it because they just want to know the truth. Brian and I have a totally different way to do things. And he's just as good. You got to find the right fit for your community. That's the key to it all. Keep going.
No.
Finish this thing.
Take one or
Your whole
Presentation.
presentation here is supposed to be about things that we can do, okay, to mitigate our expenses, all right? And all you've given us are these flyers.
Right, so in terms of HOA or condo or personal homeowners, they're all different.
All right.
Which one would you like me to discuss?
Well, homeowners is one.
Homeowners associations?
Yes, sure.
Okay, so the way that you can mitigate your claims or mitigate your pricing is a multitude of ways. For HOAs, it's more about liability, like I said. So you have to have a plan in place with your insurance agent for them to walk the property, to identify areas in your property that can cause claims to happen. That's called risk management. Our entire office, by the way, I forgot to say, my company was acquired by the 12th largest agency in the country because of the specialty that we do. So I'm a partner in a much bigger company. And we have an entire risk management department. So we would send out our risk management team, and they would walk the property and identify areas of concern that insurance companies feel cause claims. Then once you determine what those things are, we put a plan in place to fix those things. That will cost you money, but that will help lower your likelihood of a loss. When you have a risk management plan in place and you bring it to the underwriter, they're way more likely to give you a lower price than if you don't have that. If you have a lot of claims on your claims history, you have to find ways to mitigate those. You have to review them, come up with a game plan on how to fix them, implement it, and that causes your premium to go down. If you don't change the culture of your community, nothing changes. I could sit here and tell you everything under the sun. If no one's willing to do anything, no one's willing to change the culture, everything I say is irrelevant.
Now, as a homeowner.
As a homeowner, personal,
Yes.
gotta have a new roof. You have to have a roof that's at least 10 years old, or 10 years or newer, and you have to have high impact glass windows and doors. Class A opening protection, or a new roof. Those are the only two things that insurance companies look at. And of course, you can't have screwed up wiring called Federal Pacific wiring. And even when you do all of that, you still may only be limited to citizens because of the market.
Polybutylene pipes.
Yeah, those suck. I have that in my house. Don't tell the insurance companies that. Just kidding, just kidding. Polybutylene pipes. Those are the plastic water pipes that bust at any time. It's a total nightmare.
Would hurricane shutters be as good as the hurricane impact?
As long as they're up to Miami-Dade code, yes. You have to get a mitigation inspection report. Yes, sir. Sorry, Chair.
We have buildings with 80 units and we have buildings with 42 units. Can you explain why each unit owner needs his own separate individual wind mitigation survey, even though he shares the identical roof with every one of his neighbors?
You don't. You can go back to the association board. And have them provide you with a copy of the most up-to-date mitigation inspection report. As long as that report is at least 5 years or newer, the majority of individual HO6 carriers will accept it.
The caveat to that too is if you have hurricane impact windows and doors in your specific unit, but the entire association doesn't have it, the association's wind mitigation isn't going to show that you have it on your unit, so you're going to have to get your own wind mitigation for your unit to be able to convey that you have it to the insurance companies.
Absolutely.
In order to get that credit on your policy.
Very good point. Got that?
No, but all the windows are identical.
If all units are identical, then I
No
would go to
changes
the
are
board.
allowed.
Then go to the board and get the mitigation. Otherwise, every unit owner has to pay it like $150 up for, as opposed to just
That's
the,
what it is.
$100.
yeah, as opposed to the association just buying it for $250 and handing it out. I don't know. You're in Century Village. I mean, you're with Classridge, right?
That's right.
You got to change agents.
That's right, he knows, so.
That's what I would do. We're working on Senville as we speak. You know, Senville is the master association
That's
for
right.
Boca, West Palm, and Pembroke Pines. That renews, the meeting is on the 19th. And that's with a company called Assure Partners. It's either gonna be us or them on the common area. Anything else? Because Sherry really wants us to get out of here.
Thank
I'm gonna go home.
We're sorry, Sherry.
I told you I could talk at least an hour. And was this helpful?
Yes, it was.
Okay, cool. All right. Good job, Brian.
Thank you, Brandon, thank you, Brian, thank you all for coming, and we will be in touch soon. We'll be sending out the information that Captain Moss talked about. And if you have any questions, give us a call, email us. Thank you, have a great night. Thank you, Fred.
It was good hearing this week.